7 charts for you guys for this coming week. These charts are the charts I posted on my X account just several days ago, and these charts been getting a lot of engagement, and so I want to feature some of these charts and give you guys a little bit more elaborate commentary on this. So first chart right here, you can see you're looking at NVDA monthly chart, and Perfect. This chart, as you can see, is off the charts here. Is now shooting at 720. We've been going vertically here. There's no need to show any oscillators, any indicators, any moving averages. There's nothing to see here. Basically, at this point, and we witnessed something like this before, right? You guys remember GameStop, you guys remember Tesla, and then now it's NVIDIA. And there's no fundamental analysis required. There's no technical analysis required. Nothing is required. So if you're a type of person that you want to go long right now at 718, you're looking for a setup, you just go long. You just hope that it's going to continue to go higher. That's it. There's no other way to, there's no need to look for setups or look for opportunities or any sort of entry levels. Trying to look at your moving averages, look at your oscillators. None of it matters at this point. Nobody knows where the top is going to be. Nobody knows how long it's going to continue. And this is a level where we will have some degenerates out there. We'll continue to gamble on this thing, and people love to gamble. There's nothing proper about this chart right here, so place your bets, and good luck to you guys. However, semiconductor here, this is obviously gauging the entire semiconductor sector. NVIDIA is obviously helping this this ETF, the semiconductor ETF, to continue to thrive to the upside. This is also a monthly chart, and what we see here, going all the way back to 2014 or so, you see that's 2014. And 2015, 14, 15 there towards 2020, and obviously this is today. And so what happens is you can see the oscillator curls back up. That's a support. What happened is what I was actually sort of highlighting in this chart when I was tweeting or when I was posting on X, every time when you hit that overbought status on that monthly oscillator, keep in mind this is a monthly chart. So in the intra-month, intra-week, throughout the day-to-day basis, there's going to be fluctuations, there's going to be up and down shenanigans, all that. But if we're really looking at the long term and just looking at this, we can kind of assume then when we hit the overbought level after a proper correctional move, right? You see that correction there, correction here, correction here, correction here, correction here, yes? So after a steep correctional move, not just like 5% decline or 10% decline, because some of those, you can able to see, you see right here throughout entire of this bullish run, in that intra-month, there was fluctuations, 8%, 10%, 12%. But these are obviously much steeper declines. So after steep declines, right, when it hits the overbought sentiment, and making new all-time highs, we want to assume then it could continue. Again, you can see the highlighted area there. It can continue. Perfect. Again, that each individual candles that you see right there, we're talking, it could be like 12 months, up to a year, even after hit overbought. We could see potentially this market, this sector continues to grind higher. Again, with the ups and downs, in the short to midterm, in the intra-month, it could continue higher like this. And so we need to give benefit of the doubt to the buyer. This is Spider's 65-minute chart here. So keep in mind, this is a 65-minute chart of S&P 500 ETF. So based on my fib retracement, that's where we bounce here at 490, right? That fib retracement. And then now we're getting into my fib extension area. Basically, it's wave 1, 2, 3. Potentially this area 501, 501, and 504 or so. This is a vicinity where we could potentially see at least in the short-term pullback with that fib extension area as potential resistance. This is coin. This was screened on Thursday. Friday, we did see another leg higher. As long as this up gap remains open with the oscillator of that bullish divergence. And remember that oscillator came all the way back down. We talked about the fact that we had that bearish divergence right here. We saw that 2-day tankage, little bear flag right there, bear flag. And then it was definitely a telltale signal with this big bearish candle there, and that bearish candle happened after a gap up. So this is where it closed the day before. We gapped up. You see that? It closed here and then it opened here. That's why that candle, red candle, starts above the green candle, the small green candle, right? And so you can see we see a continuation to the downside. So bearish divergence, right? And then fall, bear flag, continuation. And in that process, what happened was that oscillator was fully resetted, right?
Nice.
If we look at this bottoming process, do we see any up gap? We don't see any up gap. See that? See that? There's no up gap that is sustained. I mean, you see, there's not even an attempt to an up gap. Do I see an attempt? No. There's a down gap. Down gap, there's one up gap attempt there, but second day it was failed, and then that shooting star candle not looking too good, and a follow through downside, and you see finally there's a gap here, and that gap sustained. It looks like we might get back up here, somewhere in that vicinity, the recent swing high. Perfect. And that oscillator probably gonna get back to the top of his band. Clean spark here, that again gap. You see that this was a 30-some% up move here. Look at that oscillator. This was screened on Friday. This was screened on Friday. So the oscillator does have some room here. We're not extreme overbought yet. You see that here, and both times that oscillator called top pretty precisely here. There's a little bearish divergence there also, which I've talked about on my X account, but very precisely it was able to figure out where the top is going to be, at least in the midterm. And so now on the next overbought signal, it still got room to move, maybe another day or two, maybe 3. So next week, can clean spark, as long as it doesn't waste its energy. If we start grinding here, like flagging or something like that, above the this pivot, this also gonna start dwindling down. I don't know if it starts to do this here. That could be a bigger bearish divergence, you see. That's why we need to see that momentum continuing. So this is a weekly chart. Just sort of looking at pattern recognition here, inverted head and shoulder pattern. This is a lot wider, but definitely has the formation here, and we're breaking above the neckline. Neckline is like here. See, that's the neckline. That's the neckline. The neckline for this one was a little bit. I guess you could have drawn it like that. That looked like a neckline there. Or you could have done this. So somewhere in this vicinity was a neckline breakout point right here. So market does not repeat, it rhymes, so it's probably not going to do exactly the same, exactly the way it played out back in 2021. It might do something similar. So did you know S&P during 1995 through 1996, there was only a 5% correction. So 1995, that's 1995, the sort of blue grayish background stock chart there. 1995, January of 1995 through 1996. So about here. So this much. for entire year, for 12 months. For 12 months, market S&P 500 went straight up without a 5% correction. I believe this was that 5% correction right here. Did you know? Starting from January 1995, right here, all the way to June 1996. So right here. Because I believe, did you know? S&P 500 went straight up without a 10% correction from 1995 January to 1996 June for 18 months. Can you imagine? The reason why it came to my mind was because I realized this market has gone up like over 3 straight months without like, what, 3% correction, some crazy stat like that. So it really sort of like got me thinking about it. And I believe it's a possibility, especially so much hyped up, FOMO, emotional market participants are, and obviously market loves these. These market participants love to gamble. Look at where NVDA is, and look at where the semiconductor is going at NASDAQ, and where the S&P 500 is being going every single day. I won't be surprised to see something similar, just because the market is not going to repeat. It's going to rhyme. It's going to see some similar. We could see 5% here and there, but still, even if we see 5% on Monday and just get right back up, that's something that, you know what I'm saying, for value long-term investors and people who's been already in it and been writing this. It's a great news for this market to continue and maybe do something similar to 2021 with the short-term pullbacks, but continually the entire market moving up to the upside. I think it's a possibility.